through Wall Street, and Goldman's shares fell by as much as 15%. The case centres on investment products linked to subprime mortgages, the loans that were blamed for the worst financial crisis since the Great Depression. The bank denies any wrongdoing. From Washington, Mark Mardell reports.
President Obama's top economic team gather to press ahead with tough new laws to stop another financial crisis. The White House wants to be seen as on the side of those who want Wall Street curbed, even punished.
Well, thank you all for coming.
No mention of today's charges, but the president talks of Wall Street titans still recklessly speculating and politicians with a choice to make.
Are they going to side with the special interests and the status quo, or are they going to side with the American people? And anyone who opposes this reform is going to be leaving taxpayers on the hook if a crisis like the one that we've just seen ever happens again. And I consider that unacceptable.
The charges against the biggest beast of Wall Street come from another arm of government, but fit the mood. Goldman Sachs made $13 billion last year and made a profit throughout the financial crisis. The allegations go back to 2007, just before the housing bubble burst. The people here at America's financial watchdog say Goldman Sachs sold a product that was deliberately, secretly designed to fail. Investors were encouraged to put their money in on the basis of a housing market that was going to carry on booming, but a deeply involved hedge fund was betting on it all going bust. Go bust, of course it did, and the investors lost $1 billion. The US Securities and Exchange Commission accused Goldman Sachs of defrauding investors by misstating and omitting key facts about a financial product, adding the product was new and complex, but the deception and conflicts are old and simple. Goldman Sachs hit back. The charges are completely unfounded in law and fact, they say, and we will vigorously contest them and defend the firm and its reputation. That reputation took a big hit today. The charges sent shockwaves through the markets as the US government frankly accused Wall Street's most influential bank of dishonesty. Its share price dropped by more than 15%.
In the short term, at least, it's going to make Goldman Sachs' very coveted private clients and hedge fund clients think twice about what they structure with Goldman. I think to the benefit of some of Goldman's rivals, because if this firm is suddenly and increasingly in regulatory crosshairs, that out of self-preservational issues, I think these clients might want to take some of their business at least elsewhere.
The British taxpayer might have an interest in all this. In a complex financial game of pass the parcel, the Royal Bank of Scotland paid out more than $800 million because of the deal and just could get it back. Mark Mardell, BBC News, Washington.
For